Hello, Assalamu alaikum. This is Nafiz Al Tariq and Eid Mubarak to all of you. So, after a break of 1 month due to the holy month of Ramadan, I restarted the making of some of the videos, and there has been a lot of things going on recently. So, I'll come back to those later on, but in this video, I would like to show you a recent chart that I have learned from a book that I was studying named A Brief History of Equality by Thomas Piketty. And if you read Thomas Piketty's book, his book is full of lots of data, charts, and stories. And he talked a lot about the wealth and inequality. And in this book, he showed how the over the times inequality has decreased, but at the same time there has been a lot of things that need to be done in order to do better. So I'd like to show the chart. It is related to how different groups of people, how much property they own, and the composition of the property. So let's see. So if you look at this chart, and if you look at the poorest 20 to 30% of the nation, so the very notion of property is relatively abstract to this kind of people, because they have only debts. They don't have much savings. Some people have few thousand euros that might cover their 1 or 2 months of salary. And if we look at this chart, the composition, this chart is about the composition of property in France from the data of 2020. So this is very recent book and recent data. And if you look at the poorest 20 to 30%, so they don't have much assets, and they are whatever small amount of liquid assets they have mostly their assets are in cash and bank deposits. So the poorest 50%, if we look at the poorest 50% of the people, and those people have average wealth of 20,000 euros, which is around 10% of the average wealth of the whole nation. So and it is also 5% of the total wealth. If we look at the next 40%, so from 10% to 50%, the people falling between the poorest 50% and the richest 10%. So we can call them middle class, and their fortunes range approximately around 100,000 euros to 400,000 euros. And we can see that their wealth is mainly in the housing. So their wealth, predominantly their wealth in the real estate, and we can see in the chart that real estate net of debt is a very high proportion of the middle class. And if we look at the richest 10% who has beyond 400,000 euros, property becomes increasingly diversified among these groups. So they have businesses, they have especially in the financial assets like stocks, bonds, and they have very small part of their assets are in real estate, a big part of their assets in financial stocks and bonds. So we can call the first 20 to 30% or first 50% as the disadvantaged class who have very little saving, and from 50% to 90%, which means excluding the richest 10% and above 50%, so those 40% we can say the middle class, and the richest 10% are advantaged class. So the disadvantaged classes have very little in saving. The middle class has their savings centered on housing, and the wealthy classes distribute their assets between housing, business assets, financial stocks, bonds, etc. So this is a very nice composition of the property held by different groups of people. And this data is very recent data from 2020 and from a developed nation like France. But if we look at the anecdotal data from a country like Bangladesh as well, here also it's like the middle class segment has a substantial part of their assets in housing. Poorest class normally have very little savings. They are mostly in debts, or whatever savings they have in liquid assets like bank deposits, and some people have saving certificate, but they are a little bit richer. And the highest 10% have mostly have wealth in stocks, lands, real estate, and other asset classes. So they have diversified wealth as well. And from if you are a financial professional, for example, if you are working in a bank looking at the liability raising side, or if you are working in a it's like in the capital market arena, like as a stockbroker or as an asset manager responsible for raising funds, so you can target those people who are mostly prone to have those kind of asset classes. So a bank's liability raiser, they might look into the those people who have most of their assets in uh, bank deposits, but remember they have very little wealth, so the amount of those deposits will not be high. So even if a richest 10% people have very little amount in bank deposits compared to their proportional wealth, but remember this is a percentage, so the absolute dollar amount will be much higher. So that's why many banks have priority segments. If you are a capital market professional like a stockbroker or fundraiser, you might be focusing on those richest person who have substantial amount of investments in stocks and bonds. So they are the most likely people who can who have the ability to take risk and who are likely to listen to you, and they have very diversified portfolio. So it will be easier for you to selling financial products to them as opposed to those people who have substantial assets in the housing or real estate. On the other hand, if you are a lender responsible for selling loans to personal loans or home loans, so you can focus on those middle class who have substantial wealth in housing, so they are most likely to buy real estate or land and etc. So this is a very fascinating chart. I found this very interesting and thought provoking, and I think there's a lot to learn. And if we look at a very granular level, there's a lot of information that can be derived from this chart. Thank you for watching this video. Thank you.